Hello and welcome to the Society of Financial Service Professionals audio web conference entitled The Value and Business Valuation for Financial Planners, How Business Valuation Can Improve Financial Planning and Prospecting. I'm Shannon Griffin of the Society's Professional Development Department, and I'll be your moderator today. Today's program is sponsored by Biz Equity. A special thanks to Biz Equity for their sponsorship, which allows us to offer this webinar at no cost to FSP members. Just a reminder that this webinar is being recorded, and all registrants will be sent a link to the recording in about a week. Also, a copy of the PowerPoint presentation can be accessed on the FSP website. Just follow the instructions that were in your confirmation email to get the PowerPoint, or contact member services if you need help. We will save time at the end of the program for your questions. You'll be able to ask questions by typing them in through the questions feature on your control panel. Feel free to submit your typed questions at any time during the program, but we will wait until the end to answer them. Our presenters today are Michael Carter, Biz Equity's CEO, and Scott Gabehart, Biz Equity's Vice President of the Valuation Services Department. Michael and Scott, thanks for being with us today, and I'll turn it over to Michael to get us started.
Thank you very much, and happy St. Patrick's Day to everybody today. We're here to, as was mentioned, to discuss the value and business valuation for financial planners. And we couldn't be more pleased than to have everyone's valuable time for the next 30 to 40 minutes or so. And then what we're going to do is go through some slides that give an overview of that business valuation as a market and as an opportunity as financial planners, do a quick demonstration of a state-of-the-art system for doing business valuation that we feel puts that power in the hands of the financial planners in the market today, and at the end the business owner, and then finally opening it up for a pretty interactive Q&A session. So without further ado, hopefully everybody on your screen sees an old stock ticker. So what we like to say in kicking off conversations around business valuation is if you look at that stock ticker, that's from 1897 when Edison invented the stock ticker, and what it enabled the largest and most profitably run businesses at the time, though that certainly has changed, what it enabled them to do is to know what they were worth at any point in time. And if you think about it, it's 2015, nearly 120 years later, and for the nearly 250 million private businesses around the world, they're still not afforded that luxury. And why aren't they afforded that luxury? Is the fact that historically, this process of business valuation, which we're going to talk about today, has been entirely offline. It's been incredibly slow, as much as 6 weeks, but on average 3 to 4 weeks. And it's been very expensive, with the average price being $7,500. That obviously doesn't take into account the larger kind of Houlihan Lokey investment banker type of valuations. But on average, it's been slow, offline, and very expensive, even at $7,500, out of the reach of most of the mainstream of business owners. Despite that, the market itself for business valuation is $7.7 billion this year, and that's despite the fact of these prices, as we mentioned, and it's a market that has grown. Even since 2007 in the recession, there's compounded annual growth in the business valuation market of close to 6 to 7%, according to IBIS World. And what's astounding to us, and I think hopefully all of you today, as we delve into this, is the fact that even though it's a $7.7 billion offline market, less than 2% of businesses actually get a business valuation done. Scott, a little later, our Chief Valuation Officer and best-selling author in the space, is going to talk about one of the reasons being the historical ways by which business valuation was prescribed, being episodic, and where we really see it going as just being part of the business fabric and part of the financial planning fabric for all world-class advisors. But I think that's astounding. It's a $7.7 billion market that's all offline today, yet less than 2% of businesses actually get that done. So to bring it into why we're all here, in our opinion and the opinion of a lot of financial leaders and the Small Business Administration, the single most important question for every small business owner, and we believe their financial advisor, that they should help them with is, what their business is worth. And if you think about what your business is worth, we say that's really the elephant in the room question. So you can imagine this being the advisor, the RIA with the business owner. And why is it the elephant in the room, and why is it such an important question? If you can help a business owner or entrepreneur, ascertain that answer, it opens up. It's almost an on-ramp question. It opens up many different passages for growth. One of which, and why we're on the phone today and on this webinar, is financial planning. So the ability to help attract more business owner clients to your practices by helping them understand what they're worth, the ability to better prospect by knowing what a business is worth. You're not going to prospect a business that maybe has a negative enterprise value. You're obviously going to prospect businesses that are going to have greater enterprise value. We'll talk about that a little later, but one of our clients in the UK, who's a very well-known financial advisor, said, if John's company across the street sells tomorrow, he's going to get, and it's going to be in the paper because he sells for 20 million pounds, so the equivalent of $32 million. He's going to have 7 phone calls, and we're going to be the 7th. We want to find the power of business valuation for him was finding John's company a year or two before it sold so that he could begin to develop the relationship. From a capital perspective, business valuation, as we've seen, is really a leading indicator of risk and a leading indicator of what a company could take in terms of capital. We've had the privilege to work with over a half dozen of the leading banks in the United States, and we see business valuation increasingly becoming a very important part of that. And then finally, insurance, which is really tied into the wealth management discussion. 40% of business owners don't have life, 50% of businesses are underinsured. This business valuation question is really a trigger. So, very famous face, probably the most famous face in America today, who tends to comment on everything, though he's been quiet somewhat lately, is Warren Buffett. So Warren Buffett, at a business school graduation 3 years ago, said if there was one class, and just one class, that you should take as a graduate school student that he's found was the most important area of study, it was around business valuation, because in his opinion it was the heart of investment and risk management, and without it you're flying blind. And we think the same holds true for advisors. And so if you think about it, the current challenges in wealth management today, it's really becoming the trusted advisor to your business owning clients. Today everybody wants to be an advisor, nobody wants to be an agent, and we also find another trend, which hopefully you all see as well, that everybody wants to be an RIA and a wealth manager, and no one just wants to be just a financial planner anymore. And what it really entails is delivering better advice, acquiring more assets under management as you build your reputation, delivering better advice, and retaining the assets, from a sale of a business, so that, a lot of times what happens, as we've heard stories from some of our wealth management clientele, is they want to attract more business owners, but they also want to take care of the existing business owners that they have better, because what happens is when they do have that sale or that event, and they can qualify for Goldman Sachs Private Client, which they view as higher brow and higher value-added services, they want to have another arrow in their quiver to help that business owner to retain more assets, because they stuck with them during those tough times. And there's more and more competition for a growing client base. There's that drive to independence, the drive to robo-advisors, more and more tools out there for financial planners. And we think that business valuation is this, kind of the second great wave of this. And if you think about the first great wave, we think it's around estate planning technologies and estate planning tools. There's a lot of great products out there in that space. And we think the second great wave is around helping the advisor work, more efficiently and more effectively with the business owner and the entrepreneur. So if you think about it, nearly, 500,000 RIAs and wealth advisors in North America and Europe alone. A stat that we found is 25% of the assets under management for wealth managers or wealth advisors that have over 100 million in assets under management are coming from business owners. And with that stat that I mentioned before, 40% of those business owners don't have life. So if you're a financial planner or a wealth advisor and have the ability to also recommend insurance to better protect those business owning clients, it's really powerful to be able to understand business valuation knowledge, have it at your fingertips, and not have to have them walk down the street and go to a firm that might be two people that does business valuations that charge $7,500, but that maybe only pull data from one or two different data sources. So we believe how you can attract more of these entrepreneurs and business owners is through business valuation. A little later on, we're going to show you what we hope you'll find is a very cool demonstration of it in real time. That's a chart of a dashboard that you'll see as we run through evaluation. And what we do as the only patented player in the space is we also provide a report in real time. It's 29 to 31 pages depending upon the business, and it's chock full of information with 4 different valuation figures and different KPIs, so key performance indicators, which we'll showcase a little later. And to truly put it in the put valuation in the hands of the wealth managers and advisors and give them that power, it's the ability to enable them to private label it. We think that's very important, and we've had great success with that. A nice green logo from Freedom Business Advisors, one of the fans of our product, again on this St. Patrick's Day. So without further ado, I'm going to transition it to Scott, who's going to get more into the bread and butter and kind of substance related specifically around historical business valuation methodologies and practices. And with Scott on the team since day one, our vision and mission has been, if Google's is to index the world's information, ours is to value every business around the world. And we feel if we value every business around the world and then put that value in the hands and that information in the hands of the advisors that serve them, it'll help the advisors, the financial planners, but in the end it's going to help the business owner, and that's what we're in this business to do. And we've been able to amass a database of 29.4 million business valuations. We're the largest in the world. And we really look forward to our partnership with the FSP. And I'll be with you after Scott's done these half-dozen slides to take you through a demonstration. But without further ado, we'll transition to our guru. These are our words, not Scott's, about him being our guru. And I'll pass it over to Scott.
All right. Well, thank you, Mike. And hello to all of the attendees. It is truly a privilege for me to have this opportunity to spend the next 30 to 40 minutes with you discussing BizEquity, our tool, in the realm of private firm valuation. Now, rather than
Scott, you sound like you're in a bit of a tunnel.
Is that better?
Much better.
Okay, great. My background, of course, is presented on this slide, but just to kind of cut to the chase, I've spent the last 20 years working with business owners as a business broker, and then the last 15 years working as a certified business appraiser, essentially valuing every type and size of privately owned company that you could probably think of for diverse purposes, including estate and gift tax planning, but also divorce, ESOPs, and SBA business valuation change of ownership loans. We can go to the next slide now. Now, the question I think today is, first of all, we want to hopefully allow you to reach the conclusion that taking the time to learn more about business valuation is a worthy endeavor. That as wealth managers and or insurance agents, financial planners, that there is literally value to you in understanding business valuation. So the first part of that process is recognizing that as a wealth advisor, you and your clients might benefit from a tool such as BizEquity. However, to most effectively use the tool provided by BizEquity and any valuation report that you might come across for that matter, it's also important that you take the time to understand the world of business valuation, at least to a certain extent, such that you're comfortable in talking the talk of business valuation. Now, what is business valuation? Business valuation we like to think of as a science, but in reality, it's equally science and art. We do have generally accepted valuation principles and procedures, but at the same time, there are layers of assumptions that are made throughout the valuation process that turn it more into an art. So business valuation is closer to economics, let's say, rather than physics, where the answer oftentimes is it depends. As we perform a typical valuation engagement, these are some of the key assumptions or decisions that have to be made along the way. Why are you doing the valuation, first of all? And what are you going to be valuing? Will it be 100% interest or a minority interest? Will we be valuing the assets or will we be valuing the equity? Our BizEquity report produces 4 value conclusions: an asset sale value, an equity value, an enterprise value, and a liquidation value. And learning some of this terminology and the key attributes of, let's say, an asset sale versus a stock sale, I think is in the best interest of any wealth advisor who works with business owners. And our report is educational in that regard, as is our website. As far as the historical uses for business valuation, it's a long, long list, as you can see here, and there are several others that are not actually on this list. But from the perspective of wealth advisors, I would say that from the most general to the most specific, the key areas would be value enhancement, which is a way for the advisor to work with the client in an emotionally engaging manner. And as you all know, the more emotionally engaged that you are with your client, the more likely they are to remain as a client. And Gallup has done a study to show that fully engaged customers, they buy more insurance, they remain customers 4 years longer, they're 4 times as likely to recommend you to others, et cetera. So from a kind of proactive customer engagement point of view, using business valuation is helpful to the wealth advisor. And then more specifically, estate and gift tax planning is an area that you're all involved in to one degree or another, including buy-sell agreements, which of course always have a valuation component, and then also insurance. Insurance coverage for the assets of the business and or as it relates to those buy-sell agreements. So how can you deliver the best financial advice to a business owner if you can't start with telling them the market value of their single largest asset? It is typically the case that a business would be the largest single asset in their portfolio, and therefore it behooves the advisor to take some time to learn about the valuation approaches and methods. Now, in 2 or 3 minutes, obviously there's not a whole lot that we can do, but we will be subsequently offering additional webinars, hopefully, that will allow us to drill down into some of the details, including how you go about selecting a certain valuation method from the income approach, market approach, or asset approach, how those methods are applied, and next slide. And understanding specifically what are the differences between an asset sale and a stock sale, and how does that impact the valuation result. They're fundamentally two different types of value, and it's essential that the advisor understand the difference between the two if discussing valuation with the client. There are also different types of cash flow that should be understood, including, I think, most importantly for the advisor perhaps, is that middle figure called adjusted cash flow or seller's discretionary earnings. If, as an advisor, you're able to calculate that number, and it's not that difficult, you can fairly quickly come up with a very good ballpark estimate of the value of whatever company you might be dealing with. The majority of small owner-operated businesses sell for 1 to 3 times discretionary earnings, but there's a size effect. So as the companies get larger, that multiple rises to 4, 5, 6, and it will vary from industry to industry. Waiting to value a business at the time of sale is like doing retirement planning the day you retire. So we feel very strongly that wealth advisors, insurance agents can benefit in a number of ways from taking the time to become more engaged with the concepts of business valuation and using our tool. And with that, Mike, I'll turn it back to you.
Thank you, Scott. And as Scott highlighted, as we get into the demonstration of of the product and the service offering, as Scott highlighted, it is, if you think about business valuation, as one of our team members says, it was kind of this dark art that very sophisticated folks such as Scott, who's done over 3,000 valuations, practiced in their community and across the country, did various testimonials, so on and so forth. And our view of it is there's categories of software that exist, such as Salesforce.com with customer relationship management, which really deal with not so much from a strategic process perspective, but more housekeeping around efficiencies. And if you think about it, of the 250 million businesses around the world, what's more important for them than to discover their value, to be able to monitor that value, and to be able over time to optimize that value? And as Scott mentioned, we really believe that it's the advisors of tomorrow are going to be in this increased competition and this increased drive to independence and who has the latest, greatest technology, that this is one of the last bastions that exists in true differentiation for the advisor. So if the advisor can put in the hands of the business owner the ability to value themselves, that's truly unique. What we've done, and we believe this is a global phenomenon. We're in the U.S. What's shown here is the U.K. edition. Quickly we'll move back to the U.S. edition, as well as Singapore. So our goal in life is to value every business around the world. We're on that mission, and we work with over 30 different financial institutions as our partners to do that. And we have various solutions in that space. But without further ado, what I'm going to do is, a day in the life of a wealth advisor, for instance, is if I'm meeting with a new business owner through a connection, but I want to wow that business owner, and I don't really know much about that business other than the fact that the business's name is Liquid Hub and the industry they're in is computer services or systems, and they're in Wayne, Pennsylvania. Using our engine, much like Wealth Monitor does for personal financial information to know what people are worth, we do it for businesses. We work with all the major credit bureaus, and what we're able to do right off the bat is provide a pre-value estimate based upon public available information. So if you think about what Zillow did early on, 2004 to 2008, this has a Zillow-like feel where I can put in a name of a business if that's all I know, and it's about prospecting, or I'm going to meet this business owner, as I mentioned. I plug it in, and I see that this business was pre-valued to be worth $59 million. Now, that's really important because it's going to drive my conversation later this afternoon or tomorrow with that business owner as a financial planner. It's going to drive my portfolio management theory or my portfolio management approach. It's going to drive the approach that I use in terms of managing that business and in terms of engaging with that business owner. So that's great. I'm more informed. I understand that what I'm dealing with tomorrow. I might actually want to bring in another gentleman and bring a copy of Jeremy Siegel's Stocks for the Long Run book, which is on my desk, so I just picked it up. So I'll bring that because that's a value-add giveaway because this is a value-added client. But now I'm sitting with the business owner, and they're wowed by the fact that I said to them, we have this new tool at XYZ Advisors powered by such and such platform that we can help a business owner figure out what their largest asset is worth. So if you think about it from a wealth management perspective, all this talk about estate planning technologies and tools, which have been very important to set up the first stage and to go through the first stage of the wealth planning revolution really with technology, how can you do proper estate planning if their biggest asset is their business? Can you really do true estate planning without knowing what that business is worth? And that's the approach here. So here I'm sitting with this gentleman. I put in his name, his last name. I ask him for the business structure because now what I'm trying to do is ascertain in front of him to wow him or her a more true valuation of that business. They're up to 2,000 employees, and why they're doing it is from an estate planning perspective. All around here, we incorporate best practice information around that business, that industry, that market, that segment. And here you get into the heart of the tool, and he might have said that his business has grown. He's done an acquisition. They're now doing $80 million, and their pre-tax is $7 million, which is probably going to adjust the estimated business value a little bit. But their officer compensation, which should be included in this, and we'll talk about that in a minute, was $300,000. So you see how that impacts the valuation of the business. What's really important from a business valuation perspective is if you think about it, 92% they say of all businesses in the U.S. alone are run to be tax efficient, meaning the end of the year they don't want to show much retained earnings or net income. So they run the business to pay less taxes. That does not mean, however, that business's value isn't as much or greater than other businesses in other industries that aren't being run that way. Meaning, you can't take an EBITDA methodology, and Scott touched on this a little bit, but I think it's worthwhile digging into it a little bit deeper. I think one of the biggest misnomers around business valuation that I've found as a former or as a current entrepreneur and former venture capitalist is thinking that you could take a DCF, discounted cash flow methodology, or EBITDA methodology that they teach you in B school or in private equity firms and apply it to, profitable large businesses that make up the bread and butter of, America, a trucking company, a 5-store chain, independently owned, even an IT services firm such as this, which is wholly owned by, say, a few people. If you did apply a discounted cash flow or EBITDA methodology, you would undervalue that business because a lot of times, for instance, if this number was only $5 million in $4 million in pre-tax, it's obviously going to lower it massively. But if I actually took, because it includes officers' comp and other things, $1.9 million, because this is actually bonus compensation and other things, you see that the valuation did not change that much because there's a notion and a methodology in the generally accepted valuation policies and procedures that Scott mentioned called SDE, seller's discretionary earnings. So one of the things in our mission to make a science of this and not just a black art that 4,600 people practice in the U.S. despite the fact that it's a $7.7 billion market is to have this hybrid methodology that can handle a growth company as well as it can handle a Main Street or the 92% of the businesses in the U.S. I always say, when traveling and doing these demonstrations, that the 99 and 1% problem that was so much discussed in the last election, the real 99 and 1% problem is that 99% of the businesses out there don't know what they're worth, and 7.7 million just in the U.S. are going to change hands in the next 10 years. So, 1% of the knowledge around business value and those firms that can afford to hire an investment banker, guess what? They're the same ones that are going to use the private client office of that big bank, of the investment banker. So there's a real opportunity to provide this value to the other 99%. Here, in 7 easy steps, we're up to step 4. I'm putting in more information with the business owner, depending upon the industry, of which there's 900 that we cover. We take a percentage of the AR, a percentage of the inventory, a percentage of the fixed asset, and let me make sure that I understand what the fixed assets are. No, we don't really have any of that. We only have $50,000 worth of computing equipment. Intangible assets, we don't try to value intellectual property, and because we're making this a science, our view of the world is we want this to be the standard way businesses become valued or understand their value. So here, we don't have anything on the balance sheet that we can input from an intangible assets perspective. To get a full valuation, it's 143 different data elements. Takes close to 10 minutes. It's 143 inputted or computed by our engine using big data. From a bank loan perspective, it's a pretty interesting tool to work with lenders. So what we've seen successful wealth managers and financial planners do is also work with wealth managers and work with other banks and accountancies in their space and almost create an ecosystem around this tool, because now they can all share information together to better advise and better serve that business owner. Here's a very interesting aspect of the product. So I mentioned SDE, seller's discretionary earnings, but I also mentioned DCF. So our goal and mission is to value growth companies like BizEquity, as well as we value, John's Flower Shop that has 3 flower shops in, southern Minnesota. So the ability to do that on the growth side is the ability to understand projected revenue growth and long-term EBITDA margin growth. So here, in sitting with the business owner, if they're trying to time when they were going to sell the business, you could say to them, and they were looking at an acquisition, and they know that in the space of IT services, in the dawn of kind of this era of technology, they can get, look close to one-time sales. So if I was able to grow my revenue growth at least was going to grow from 10%, say, to 56% because I was going to acquire a pretty good size asset, you could see how the value would increase. So it's a really cool planning tool that we've seen. Over 200 business coaches use the product for their and consultants for their clientele. If the percent of business recurring in this age of the internet is increased because they do a lot online, that's another way to ask the gross margin question. You can see how that increases. And then finally, getting to this last page and a lot of the qualitative questions that Scott would ask, clearly we've ramped up this company's business value through growth and EBITDA margin. And you can say now, if a lot of my customers come from the top 3, how would that impact my value? Well, there's more risk on the business, so that would decrease the value. In reality, maybe only 20% come from the top 3, and only 5% is conducted online. And the owner tends to have a lot of the relationships, so it might fall substantially if the owner of the business were to leave. They do not, their current life or key person insurance or whole life coverage does not support this valuation. So, to us, and we've been told this, there's a couple big trigger points. One is the engagement and engaging the business owner and differentiating yourself from other folks that might even have the biggest resources of the biggest banks in the world, but they don't have this product. Two is prospecting to the ones you want to talk to, the larger value companies. And I think three is this slide that says, or this piece, when you get here, it says, does your current key person insurance coverage or life insurance coverage cover this? That's a real trigger question where, you're doing the client a favor by getting them a certain percentage. And it might be, if they own 80%, it might be 25% of the 80% of the value that they should have some form of insurance protection around. Even though the business will live when they pass on, in this case it would plummet. So therefore, you should tie that into some form of an insurance policy. And I think that then sells not just them thinking that you're looking for additional commission and premium dollars, you're really looking out for them. And then finally, if I log into the system, you will see a dashboard that a business owner would have at their fingertips. I did all caps. It's good the CEO can't log into his own system, so let's see here. Boom. There we go. Amen on St. Patrick's Day. So here you see Liquid Hub. I just ran. If I'm a wealth manager, I would have view companies here, and I would have multiple companies. So if I was a wealth manager, you could see all the different businesses that I've run. Here, the valuation history of Liquid Hub, the business information, the KPIs. So one of the things we don't talk about so much on this valuation discussion is about how key performance indicators really matter, because I think it goes beyond just providing business valuation and gets into performance and how you can help them by just shining a light and giving them a tool. I think it's really important with business valuation. No one's expecting a wealth advisor to become a business valuation expert, and we'd fail if today we tried that. What we're just trying to show is business valuation is a massive opportunity that few people know the knowledge of. It's one that if you could provide it to the business owner or entrepreneur, you can capture their hearts and minds. And it's one that's total value add so we kind of approach everything that way to say, how do we surround the wealth advisor or financial planner with a product that can be this total value add to the business owner? And you can keep this, we've seen wealth advisors successfully be the ones with the dashboard itself, but only give the report, or we've seen them pass it on to business owners. If I wanted to show a report, that business that I ran, which probably won't be the best looking report because I only did 1 year, so you can imagine if I did 3 years how rich the report would be. That being said, I wanted to show you what it looked like. So this could be branded with your own financial advisor, wealth management firm's own look and feel. It's powered by us in the cloud. We have very strong term of use and term of service language. We get into the methodology. We show you the valuation figures, asset, enterprise, equity, and liquidation. It's all definitional. We get into the financial statements. What we've been told by business owners and wealth managers that have used it with business owners is the fact that when you print it out in color, the spouses of the business owners loved it because they would say, we never had a business plan for 15 or 20 years. You print this out in color, you have a business plan. And I would say, to be fair, this is really for the under $100 million business, with the real sweet spot being those businesses that are $500,000 to $50 million. And the median valuation that we've seen, the mean valuation, is around that $6 to $10 million average. Seems to be a ton of value there, and they're really the bread and butter clients for we find the financial advisors out there that could really utilize this, because you're passing on this very important knowledge. So here you see some of the KPIs. In every KPI, we say, what does it mean? Why should it matter? Give me an example. So it's very powerful information as a leave behind. And again, chock full of information, 29 pages. And then the last page is tailored to the advisor a lot of times. There's a very cool feature that I showed you a little bit of, but I didn't do full justice to. Now I'll do a bit of justice to it, is if I'm a wealth manager and I'm based in Houston, Texas, and I want to show every business that's valued, pre-valued, between 1 million and, say, 22 million. You can search by business name. You're going to be able to search by industry. But here I searched, show me every business in Houston, Texas, 1 to 22 million, and it gives me a heat map of the different businesses, where they're located and what their potential value is. That's a pretty powerful prospecting tool. We haven't announced this product. It's live, but we haven't announced it to the market yet. Sneak peek for our partners at FSP and everybody on this call. We're very excited about it. In solutions, if you clicked on wealth management, it says we have a little brief video, which I'm not sure how well it will come through if we share it, but I'm going to do it anyhow.
For wealth managers and financial planners, the key to success is knowing what all of your clients' assets are worth today, so you can help preserve and grow them tomorrow. And there are a lot of fancy online tools that provide you with real-time values of their real estate, investment, and banking portfolios. But how can you properly advise your best clients without knowing what their biggest asset, their business, is worth? Now you can, with BizEquity. BizEquity is the only patented online service that generates accurate business valuations in real time. Now wealth managers and financial planners can more effectively advise and protect clients who own businesses by having access to all the information they need. See how BizEquity makes it easy to better advise your biggest clients and attract more of them. Go to wealthmanagement.bizequity.com today.
And, finally, just to give you a flavor for what we've been able to do with some of our partners that are wealth planners is, a firm that's doing terrific and that we respect a lot, Dynasty Financial Partners. They're helping to drive a lot of this independence movement. They're a client of ours. They private labeled it. They view us as, the best product they've seen certainly for business valuation, and an important tool in their toolbox for their advisors. So, we really appreciate everyone's time. We understand that it's very valuable, especially at lunchtime on St. Patrick's Day, and we'd love to open it up right now to Q&A. Once again, thank you so much.
Okay, great. Thank you. Just a reminder, you can type your questions through the questions area of the control panel, and I'll read all the typed questions out loud, and they'll be answered by either Michael or Scott. Our first question is, can you tell us the 2 use cases where you think business valuation is really the biggest and most important for wealth advisors and financial specialists?
Yeah, sure. So I think we talked about this a little bit, but I would say the first use case, I think, is around prospecting and the ability to use that new search feature to better prospect and understand their market around them or their patch around them. And, when you then go to meet that business owner, to be able to talk about the fact that you have this new tool that could help them value their business is very powerful. The second use case is, I think, for existing clients around estate planning. And I always think about the advisor that told me the story about how they worked with the business owner for 4 years. When the business was creeping along, the business sold to by a bulge bracket firm, and then that business owner joined the private client group of the bulge bracket firm because the private client group said of all the resources they had. So I really think having this as the ability to do annual estate planning or integrated into their world-class estate planning systems that are out there is very important. So 2 primary use cases: prospecting and engagement, and then the second one being estate planning is how we see it.
Okay, and can you talk about the cost of the program?
Yeah, so we're rolling out new pricing, and the new pricing, if you go to under solutions and you click on wealth management, there's a gentleman by the name of Brent Heflin and his contact details, and he can walk through. And then if you click insurance, if for any insurers, because I heard that there's some insurers on there. There's a gentleman by the name of John Hallinan that can walk through. But to net it out, the new program, and again, like the search feature, I'm getting ahead of myself by a few weeks, but I'll tell everybody on this call. It's $4.99 per month, $499 per month. They get 4 seats internally, so 4 different advisors can use it. You get to value, 25 companies a year, so that's a big savings of, I think thousands of dollars, and the ability to search 250 different businesses. So $4.99, you get your own brand. It's branded, co-branded by us, private label branded. You get to value at least 25 companies a year. Our sales team is pretty aggressive with that, so you might be able to get a little more if you're nice to Brent and nice to John, and the ability to use that search feature. So that's. But if you didn't want to, if you're a single person shop, right now off of BizEquity, and you don't really care about your own private label branding, right now off of BizEquity.com, you go to pricing or sign up, and there's a $199 professional edition. That might be $199 to $299 professional edition, where you can value a certain number of businesses.
Okay. Is there a fact finder? How do we get the information to input into the system?
Yes, we can send that around, and we can distribute through you. So we call it our stepwise framework, and we have that. And that's a very powerful and helpful tool.
Mike, and I would also add that on the tool itself, there are icons at each point of entry that help to clarify each item.
Yeah, great point, Scott. I rolled over some of them, as you guys saw on the call, but I didn't specifically kind of vocalize that, but that's a great point. And there's also a view a sample report online. Our development and engineering team's really taken, we say, kind of a Google-esque approach where we want this all to be self-service. We never have implementation. It's called onboarding. It's quick. People can get trained up, within an hour and be rolling on the product.
Okay. The financial advisor selects the valuation method. Then what is the financial advisor's liability if they pick the wrong method?
Yeah, so there's no valuation method per se they select, right? By using BizEquity selects the valuation method, and that's the point. It's a hybrid methodology that's embedded based upon the type of industry, starting with step 1. That being said, the liability all folds to us. We've had one of the biggest banks in the world. We passed through quickly with them. We've never been turned down from a compliance perspective or a governance perspective. We have very strong language. At the bottom of every page, there's a term of use and term of service language from a liability perspective. It's hosted on our cloud, encrypted, secured, and everything flows to us.
Okay. Let's see. Do you see yourself working or integrating into the large estate planning tools like eMoney Advisor, Naviplan, or InvestNet?
Yeah, so absolutely. We're big fans of eMoney here. We think that they, really help drive the whole first generation of this type of technology, and they're driving second generation as well. Yeah, I mean, we hope to be able to be integrated into tools like that in the future. It's really up to the client whether or not they want that integration, but we're big fans of eMoney. We like Naviplan, and from InvestNet's perspective, we think what they're doing on the portfolio management side is very, very interesting. So yeah, I mean, our goal in life is to work with the best of breed, and those 3 names that you mentioned are the best of breed.
Okay. Many broker-dealers are very specific about advisors discussing valuations of businesses due to FINRA rules, etc. Have you dealt with these issues, and do you have disclosures regarding this issue in the reports, etc.?
Yes, we do, and we actually just dealt with that 2 weeks ago with one particular advisor, and we got through it, I think, within 7 days. 7 days. Yeah, so we add one of our folks that did that particular account they add their disclaimer on top of our existing disclaimer if ours wasn't, tough enough, and that's what got it through. But I think it took us 7 days cradle to grave. Correct, Brent?
Yep.
Yeah.
Okay, I'm seeing one more question. How close are the biz equity valuation numbers compared to the calculations approved by the IRS?
Yeah, so the calculations that are approved by the IRS is that they would have to be their certified valuations that are done by offline providers. And I think what's really important is we've taken a Google-like approach. So it's much like when you do a Google search, Google doesn't say you can't search for a Chinese restaurant because you're not in San Francisco because you're not in San Francisco. So our view is good data in, great result out, 99.9% accurate. Bad data in, bad data out. So we're never in the position, at least from a system perspective, to certify that. Nor do we want to be, nor does the wealth advisor want to be. That being said, we offer through Scott and his group internally a certified valuation service that's a letter to authorize that the data entered is actually the actual data being entered. But we've been benchmarked against some of the largest banks' internal audits of companies, and we've come within 2%, and the furthest we've been out is within 10% of valuations that took 4 to 6 weeks. We have some great case studies on our site. One gentleman who sold his IT services business through our engine, it was valued at 18 to 21 million. An existing investment bank that he had worked with for 10 years valued it at 12 to 13. Because of us, he changed investment bankers, did an auction process, and Ernst & Young, the name of the business was called Logistar, so it's a actual business in Pennsylvania. Ernst & Young paid right at the top end of our range. So his view is for a few $100s, we saved him his pro rata share was like $3 or $4 million. So, all it takes in this value-added service is one new client you can win and one new client you can help, and it's very powerful. And we'd love to be able. We do a free trial or a discount to those gentlemen that I mentioned off of the pull down. When you go into solutions, you can just look for Brent at the bottom of the page. And then also when you go into solutions for any of the insurers on the call, you can just look for John Hallinan, who's at the bottom of that page.
Okay, yeah, and a couple of people said, how do we reach you? So
yeah, so their phone numbers there and their emails. My email is mike@bizequity.com. And Scott Gabehart, who's our guru in the space, our Chief Valuation Officer for any very detailed questions, is S Gabehart at BizEquity, right, Scott?
Correct.
S Gabehart
at bizequity.com.
and you can always contact the FSP. We can get you in touch with them. And that looks like it was the last question, so we can conclude at this point. Just a quick reminder before we end about CE credits. There's the one PACE credit, one CPE credit, and one CFP credit for participating in today's live webinar. If you requested those credits when you registered, a certificate of completion will be mailed to you in about 2 weeks. And we will report your CFP credit to the CFP board for you. And for those that are logged into the web portion, you'll see a short evaluation when you log out. If you take a moment to complete that, we'd really appreciate your feedback. And on behalf of the Society of Financial Service Professionals, I'd like to again thank Michael and Scott for their presentation, thank BizEquity for their sponsorship, and thank you all for your registration and participation. And the conference is adjourned. Thank you.
Thank you.
Thank you.